We're now talking about Avio Research, and they are an independent equity research house with considerable experience in the industries that they cover. They are, of course, servicing the institutional as well as hedge funds, and they are based in Cape Town. We're joined now from our Cape Town studios by Mark Hodgson. He's an analyst there. Mark, good evening. Give me any reason why anyone would be considering industrials like Nampak, particularly in this environment where you have got the rand reasonably firm, and therefore firms able to go and import most of their packaging, and therefore giving these guys a very good run for their money.
Sure. I mean, I think the key really is Nampak's very cash generative. They've got a good footprint already. So they're certainly a tried and tested partner for a lot of South African corporates who are looking increasingly to go more into the rest of Africa, and they're already very much there, and certainly they've got the ability to invest and put up more facilities, or by acquisition growth also expand their presence.
Hi Mark, Viv here. Industrials have obviously done very well since the 2008 recession. I mean, they've certainly outperformed the other sectors, really outperformed resources, and even recently, until recently at least, they've been outperforming financials as well. Do you think the sector has run a lot, or do you think there's still, I mean, Godfrey did mention the fact that there's value still available, or do you have to be more careful in terms of what you pick in the sector?
I think you're quite right. You do need to be a bit more careful to see what's really offering value, because certainly the prices look a lot more expensive, and you can only really justify some of them based on lower bond yields. So you really do have to look more for the ones that have turnaround opportunities or acquisition opportunities. For instance, Imperial's benefiting from a German logistics acquisition that it's funded very cheaply, as well as the motorcycle, which has surprised on the upside. So I think given the price appreciation you've seen, one certainly has to be more cautious and picky now.
How hard do you have to look, Mark, when you look at the current environment, particularly when you consider the fact that we've got interest rates at 3-decade lows, and some are saying, I'm suggesting that perhaps we're likely to see another cut, so surely that should be favoring these guys given their focus on the consumer sector?
Yeah, well, that's certainly going to be good for consumers to be able to, but I guess if we are cutting interest rates, that does mean that growth's slowing, and that there is some stresses and strains coming through from slowing global growth. Certainly from our point of view, Lewis Group, which had a trading update on Friday, although it's certainly underperforming the greater retail sector, you're certainly not paying very much in relation to a well-managed furniture company that certainly taps into the unsecured lending market.
Yeah.
So even though low interest rates are good, I think you've got to be quite selective again.
Speaking of Lewis, like you mentioned, it underperformed, but that's an understatement of note. I mean, it hasn't done anything in 5 years, or the rest of the retail sector has gone, quite frankly, ballistic. The clothing retailers have done, multiples of in terms of returns over the last 5 years. With regards to Lewis here, it's a bit strange in terms of just how much it's diverged from the other parts of the retail sector. Is it just because of the product mix, and also, in terms of its revenue structure? I think it's a little different from the other retail stocks, isn't it not?
It is different because it's much more about growing a lending book, so it's more akin to a banking type business as well as a retailer. The other thing is you've had a lot of deflation coming through with a stronger rand, so it certainly had that to bat against as well. So yeah, you're right that certainly it hasn't done anything like the clothing and food retailers. So as a lagger, we certainly see that there is certainly a lot more value, and it's certainly foreigners, although they are investors, they are much less of a factor in the likes of Lewis.
Yeah.
So certainly it does stick out, and one does certainly have to be cognizant of sort of National Credit Act type legislation if there are further amendments to that.
Yeah, let's talk about your winners then. I guess Lewis is one of those. Where else do you see value within the industrial sector?
Well, I mean, I think Eqstra, which reports tomorrow, potentially offers some value if it can turn around some of its contract mining contracts that have underperformed. On the flip side, clearly we've seen the Lonmin unrest, which could be quite bad for that contract mining space as well. So Eqstra certainly trading at NAV isn't expensive, but it is also reflecting some of the uncertainties and risks as well.
Speaking of the
But
mining
it's
sector,
certainly underperformed.
well, again, speaking about the mining sector, obviously we've seen prices come down dramatically. So not just in terms of the stock, but also there's been questions about the outperformance of China for the last few years. And I think Vale came out and said that the golden years for China are over. If that is the case, would not a stock like Eqstra, which has a large dependence on mining equipment sales, etc., and servicing and so on, would that stock not be adversely affected by such a downturn?
Not necessarily. It depends really on the commodity demand and whether it's got the right sort of low-cost mining customers. It certainly needs to be more selective, but it's also got fleet leasing businesses as well as industrial type businesses on forklift sales. So it's much more of a GDP play for the rest of the group. It's got some money in from the sale of its Bucyrus assets to Caterpillar Barloworld, so it needs to make some decisions around an investment in Protect that it has. So it does have some more flexibility at the moment as well.
Now, speaking about the fleet business, I mean, there's been some changes there. I know Supergroup lost a contract in Joburg and also the Eastern Cape. Are you seeing any kind of moves on these larger contracts, either in the government or the private sector? Because these are quite important if you're looking at that particular part of the industry.
I mean, you're right. The ones you refer to, that's more a function of Supergroup, which reported earlier today, not Eqstra per se, but certainly these government type contracts for large numbers of equipment and vehicles do make quite a nice swing factor, and certainly allow you to get better overall returns. But you certainly do have to manage your private public sector mix and look at obviously payment type things which we've seen in the construction sector.
Yeah. Let's talk about your recommendations within the industrial sector. I mean, have you had to change any of your recommendations on any of the stocks in that sector? And what would have been your reasoning for it?
Well, I mean, I mean, we've got quite a few results coming up shortly. Certainly, Imperial has performed very strongly, so it's certainly I've got it more neutral at the moment. So it does depend on the outlook for the motor sector and whether they can still sustain the growth going forward. But certainly some of the stocks, certainly one's going to have to look quite hard to see the value in them. But Lewis, certainly we've seen value since May this year, and we still continue to see value in the share.